The $1 trillion idle liquidity. Bitcoin has over $1 trillion in dormant liquidity that effectively cannot enter a smart contract without a middleman. As of today, April 30th, 2026, the Stacks network just released a roadmap attempting to bridge that gap using a self-custodial architecture. We are looking at the technical reality of SBTC and whether the promise of Bitcoin native yield is an engineering breakthrough or a high-risk custodial workaround. Engineering the decoupled peg. The core of this roadmap is SBTC, a one-to-one Bitcoin-backed asset that recently removed its deposit caps to allow for unlimited capital inflow. Unlike previous wrapped versions, SBTC uses a threshold signature system where a decentralized set of signers manages the vault. However, the engineering friction remains in the peg-out process, which the upcoming 3.4 network upgrade attempts to harden against signer collusion. The realities of Bitcoin yield. In 2026, the primary economic driver is dual stacking, a model where users lock both STX and SBTC to earn yields averaging between 5 and 10% paid directly in Bitcoin. Skeptics point out that while these rewards are physically backed by Bitcoin from the proof of transfer consensus, the total value locked remains volatile, dropping 50% from its $600 million peak in late 2025. This volatility highlights the tension between institutional-grade infrastructure like Fireblocks and the inherent risks of decentralized lending protocols. The performance versus adoption gap. March's 3.3 upgrade reduced chain state growth by 20%, stabilizing the network's sub-10-second block times. This throughput is the baseline for the roadmap's next phase, which aims for massive scalability via the Clarity WebAssembly integration. While these technical milestones are objectively impressive, the developer ecosystem has seen a sharp contraction in core commits over the last year, suggesting that the engineering complexity of building on Bitcoin remains a significant bottleneck. The signal under the noise. The 2026 roadmap signals a transition from treating Bitcoin as static digital gold to treating it as the primary settlement layer for a productive capital stack. By integrating self-custodial staking and institutional tools like Circle's USDCX, Stacks is attempting to solve the Bitcoin trilemma of speed, security, and programmability. However, the data from the SBTC volatility and the developer contraction suggests that institutional adoption is moving much slower than the protocol's engineering pace. The real test is not whether the tech works, but whether the market trusts a decentralized peg enough to move billions in Bitcoin through it. This shift moves Bitcoin from a passive treasury reserve into a functional capital asset, but it also introduces smart contract risk to the most secure asset on the planet. Watch the activation of the 3.4 epoch at block 943-333 as the indicator for whether the network can actually handle this level of institutional weight. Subscribe for more